Hi, everyone, and welcome to the Home Buying Seminar of 2021. My name is Stephanie Spann. I'm with Berkshire Hathaway PenFed Realty, and I'm going to share my screen right now because I have some very important people that I want you to meet. Okay, again, I'm still here, so don't think that I have left you. Stay with me. Like I said, my name is Stephanie Spann, and today I want to introduce you to Cynthia Prazos. She is a mortgage loan officer for the Pentagon Federal Credit Union. And Gary Walters is a mortgage loan officer for Prosperity Mortgage Company. And let me tell you, these two people are some people that you will be glad to know. Today, we're going to be going over the home buying process. And that process will be, first, it'll be the initial consultation that will be with me. Then I'll ask you that question about pre-approval, and we'll go over those steps. Then we're going to go shopping. You're going to choose the house that fits perfectly for your family. We're going to place an offer for it. And once it is already accepted and everything is signed, we'll go through the process of your earnest money, option fee, and inspections. I'll be telling you about that, and we'll request any repairs that may need to be done. We'll go through our final walkthrough. Your documents will be signed. You'll get funded. When they record that title, in seconds, you will get your keys and we will celebrate. So I want to read to you a quote from Warren Buffett, and we all know that he knows everything about real estate and money. Price is what you pay. Value is what you get. I'm going to introduce you to two very valuable people shortly, but now we're going to go to that initial consultation. I'm going to be asking you, what is your time frame? When do you need to move? Will it be within a month or 2 months or maybe 6 months? Who will be involved in this home buying decision? That's important because everyone who is involved needs to be there on every step of the way. Where do you want to live? Is school districts important to you? What neighborhood and what city would you like to live in? Do you have any special needs? A lot of times there may be special needs and you need to be close to a facility for special needs. You may have a person that may need hearing, the signs up for the hearing, or any type of need. And which is the best way for me to communicate with you? Let me tell you, that is the most important thing, because if you want me to text you and I'm emailing you, or you would rather me call you and I'm texting you, you won't be happy with me. So we want to get that ironed out right up front, and what your expectations are of me as your real estate professional. And I will agree with whatever you expect of me, and I'm going to give you some extra things as well. But first of all, the first question I am going to ask you is, are you pre-qualified? And are you working with the lender? Because that is important. We can't do anything unless those two steps are taken care of. And to explain to you the difference, I would much rather you be pre-approved. Because if you're pre-qualified, that just tells me that you have called someone and told them you want to purchase a home, and they've done a kind of overview. So they're just saying that it's possible for you to buy a home, but a pre-approval, that calls for some work. That means that you have provided the lender with your W-2s, your bank statements, and pay stubs. Now, this may take a little longer, but this tells me exactly how much we need to be looking at, how much home you can afford. And let me make this disclaimer: just because you can afford a $400,000 house, that does not mean that you have to buy one. You will buy what you're comfortable with. And this gives that seller, when you get ready to purchase their home and put an offer for that home, that gives that seller the confidence to know that you're serious and you are able to buy that house. So let's get you ready and able to buy that house. I'm going to first introduce you to Cynthia Prazo. She is a mortgage lender with the Pentagon Federal Credit Union. And with her, all I have to do is have you give her a call and she takes it from there. I tell all of my clients, I am not a professional when it comes to finances. I have a team of people that I work with. That is their specialty. So we're going to start with Cynthia. Cynthia has been a loan officer for the Pentagon Federal Credit Union for some time now. And let me tell you something else, regardless to what happens, you will get a membership to the Pentagon Federal Credit Union, no matter who you finance with. So Cynthia, I'm going to let her take it from there.
Hi there, Stephanie. Yes, well, it's great to be with you this afternoon with you and Gary. Yes, my name is Cynthia Pazos, and I am with PenFed, Pentagon Federal Credit Union. We are one of the strongest credit unions in the nation since 1934. We were originally established, we're the same credit union to the Pentagon, so we're definitely here to assist you in every finance needs that any finance needs that you might have. I have been in the mortgage business about, I would say about 27 years myself. And why would you need a loan officer? Well, Gary and I were both licensed professionals that can assist you with analyzing and assisting you with going over your credit and seeing what is the best program for you to assist you in the home buying transaction, and which is one of the biggest investments that you'll ever make. So the first thing that I would do is have you go on my link and apply on my link. I basically analyze your credit and ask you how much down payment, and we'd go over the down payment and running the credit, analyzing what type of program, and just overall looking at your financial situation. So that is the very first thing that I would take a look at and assist you, so that way we can obtain the best program for you. With PenFed Credit Union, we do have great first-time home buyer programs. One of them is our 3% conventional down payment. So unlike FHA, this only requires 3%. There is no income restrictions on my program, but I will definitely be looking over all your financials and seeing what is the best type of program. So yes, that we would have that 3% conventional down. We have amazing VA programs. My rates are usually about 0.25% lower than the average lender because I am a nonprofit credit union. So what does nonprofit means? With PenFed, we do not charge origination fees. So that will save you a lot of money. We don't have processing fees. There is no underwriting fees. And so that will definitely save you money with your overall cash to close up front. So we do look at your monies and try to save you as much as possible, as much as we can. The one thing that I wanted to go over with you today is our 3% conventional, which I think that is one of our strong points, because with other lenders, you do have income restrictions. Our first-time home buyer there's no income restriction. So Stephanie, what that means is they're able to obtain this low down payment with having no restrictions as far as the income. So that is great. So we have that program, and I will be assisting you in looking if that's the best program for you, or fit you into another program. We do not offer FHA loans, and so FHA loans is if you had lower credit scores. I do recommend at that point for you to obtain an FHA. That's where Gary and I would work together, and I would say, Gary, their credit score is lower, so their mortgage insurance will be higher. So I work alongside Gary, and just our goal is we always do what is best for our customer, whether it's directly with me. And if I do not have a program, then I would definitely guide them to Gary. And we're always trying to find and put you in a better program that is better for you. So we do definitely look at that. We're here to assist you. With us being a military credit union is what we were established. Our VA rates are amazing. They're very low right now. We have no lender fees on our VA mortgage products. So we do specialize on VA loans. So if you do qualify for a VA, definitely let me know up front. That is a 0 down payment loan, and with very little, well, no down payment, and very low down closing cost up front. So I just wanted to cover what a loan officer does, and that's basically coming to us, having us look at your credit, analyze your credit, look at your down payment. We basically look at every single thing of your credit worthiness and find the best program for you. So that's one thing, is we definitely try to do the pre-approval up front. Like Stephanie says, she wants her clients pre-approved, and that's actually a wonderful thing, because what you're showing me is all your income documentation up front. So that way, when you're submitting offers, you do, the listing agent knows that you are a strong buyer, because the lender has already verified your income and your assets, which is your banking information, your down payment and your income. So that is definitely much more stronger than just a pre-qualification. So the difference between the pre-qualification is you're just stating what your income is. We run the credit, but nothing is verified. So versus a pre-approval, we have analyzed and we have asked for proof for that income. So that is definitely the difference there. So having us look at your everything up front, we're able to determine the best program, and also tell you the difference between the pre-qualification and the pre-approval. And you definitely want to do the pre-approval when you are first looking for a home, because that in this market that we have today, with a lot of multiple offers, you're definitely a stronger buyer with showing that you're pre-approved, for sure. And I'm not sure if Stephanie, you want to go ahead and submit the slide on our conventional program.
Okay. Is this it?
Okay. Not sure if I can see it there.
Can you see it?
I can't see it for some reason on my computer, but
it's the guidelines for Home Ready.
Yes. So basically, with our guidelines with the Home Ready, that is a program that I spoke to you about earlier. This is a program specifically for PenFed. Most conventionals, as I was stating earlier, they do have income limitations. With us, we have no income limitations. Most lenders, if you have a higher income, let's say higher than 60, 70,000, they require for you to put more down payment. With us, our Home Ready, which is our first time home buyer, we have both. There's no income limitation. You do get the same rate as you were doing as our Home Ready and our first time home buyer. So I will definitely analyze that and see what the best program for you is. But our 3% down is definitely really good. It's better than going FHA, because your mortgage insurance, if you have great credit, is lower. It is removed once you meet some guidelines, but having equity or buying down the loan balance. So I do definitely cover that with you. But on those programs, that if you have the great credit, then 3% down, I will go over that with you, if it's a better program than going FHA. Now, sometimes if your credit score, I would say, is lower than 660, once I run your FICO score, a lot of times even 680, I will tell you, based on your credit, I really believe that you should go FHA, because your mortgage insurance, that's a private mortgage insurance that you pay every month, that is higher the lower your credit score is. At that point, then your option would probably be better to go FHA. So I do run it, I do look at that, and then I will guide you as to, is it better to stay with me or probably go with Gary on the FHA, or maybe you need zero down payment. He has great zero down payment programs. With PenFed, we strictly have the VA amazing interest rate, our 3% down conventional, and alongside our conventional regular programs, and our rates are usually about 1/4% lower. So you're going to receive a phenomenal interest rate with the higher credit score. So that's what PenFed, that's our niche. That's what we are known for, is those amazing interest rates with no lender fees.
Okay, I am going to go to the next slide, and that's about borrower's income eligibility, and you've already told them that. And hey, things happen. You could not see the screen, but now if anyone has questions, at the end, you will be able to contact me and email me, and we'll get your questions answered. So right now, we are going to go to, I am going to make Gary the host, and you are going to meet Gary Walters.
Hello, everyone. My name is Gary Walters. I am a mortgage loan officer for Prosperity Home Mortgage. As my bio says, I'm a Texas native. I've been doing loans for over 20 years. And, when it comes to doing a loan, just like Cynthia said earlier, it's all about getting the best product or the best program to fit your needs. What I want to talk about is the opportunity that's available with a couple other programs and a couple other products that may be a little bit more of a benefit for you. So what I'm going to do is go ahead and share my screen. Is everyone able to see that?
Yes.
Yeah.
Okay, so we're going to talk about home buying 101, right? More of my information there. Today's agenda is going to be about the benefits of home ownership. We'll talk about that a little bit. I also want to talk about home buying myths and facts, and how do I pay, what do I pay when buying a home, and then down payment assistance. And of course, we're going to talk about FHA loans compared to conventional. Now, what are the benefits to home ownership? Benefits are home equity. You get a chance to build home equity. A lot of times what I tell people who are renting is that all you're doing is paying 100% interest. You're not getting any money back for that money that you spend when you make that rent payment. But if you own a home, you get an opportunity to build equity. The equity is the principal portion of what's available between what you owe on that mortgage compared to how much that home is worth. So if you have a home that's worth $200,000 and you only owe $100,000, well, guess what? You got $100,000 worth of equity that you can use for any financial desire you may have, whether it's doing some home improvements to the house, whether it's taking money out to pay off all your bills, whether it's to send your kid to college. I mean, that's what that money is there for, if you want to take advantage of it through home ownership. But if you're renting, you don't get any of those type of options because as you're renting, you don't buy in and you don't start building equity when you rent. Another thing about a benefit with home ownership is that you have predictable payments. I talk to a lot of people that are renting, and they'll say, Gary, the reason why I'm looking for a house because my landlord just increased my rent. Well, if you own your own home, you have a little bit more predictability when it comes to that monthly mortgage payment. Also, you have tax advantages. I've told many clients that, you know, when you buy a house and you start doing your taxes, once you have a home, you'll get a little bit more money back on that tax return. Because you own a property, you get money back off of the interest that you pay on that home. Then also, what I think a lot of people love is that you have more control over your space. You know, when you have your own home, that's your home. You can paint the walls whatever color you want to paint them. You can, you know, make that property fit what you want. And usually when you're renting a home, for example, that landlord won't let you do a lot of stuff because they own the property. You know, you have to keep the walls white and you can't change the color of the walls when you don't own the property. So what's important too, when I talk to first-time home buyers, people that are looking to buy a home, is I talk about the myths that's out there. One of the myths that are out there is that renting a home is always cheaper than buying. We're going to talk about that. Another myth is that you need perfect credit to buy a home. We're going to talk about that. You need a large down payment to buy a home. Not true. And there's another thing that people say, that there's no benefit to using a real estate agent. Well, there's definitely a benefit to using a real estate agent, and Stephanie Spann is one of the best ones that's out there. So definitely want to talk about that a little bit at the end. But here in the DFW, the average rent is $1,600 a month, right? So when you are renting an apartment or whatever, you have to pay upfront cost. Usually you have to pay a $1,600 deposit, then you have to pay $1,600 for the first month's rent. And if you have any fur babies, that's another $500. So the total that you'll pay is $3,200 to $3,700 renting a house. I mean, renting an apartment or renting a house. The upfront cost when you have credit issues, when you're renting, is that you got to pay the $1,600 deposit, the first month rent. You also have to pay a $500 pet deposit, and then an additional deposit at times because you have credit issues. So when you're renting, you can pay $48 to $50 renting. That's a lot of money to pay just to rent a space. And I'll show you guys how if you purchase a home, it might not cost as much as you think it does. And I can give you some examples where it costs less than if you decide to rent a place. This is something that's very important. If you're paying $1,600 a month in rent, in 5 years, you'll pay $9,600 in renting. That could be equity that you could have built in your own home. Half of that money could be available for you in 5 years to use, you know, for, you know, paying off all your debt, to doing home improvements, like the examples I gave you earlier. So what do I pay when buying a home? Let's talk about it. Typically, when you buy a house, you got to worry about three things. I always say three things because most of the time we just say two things, which is down payment and closing costs. But I'll break it down a little bit more. I think you have to worry about the down payment, the closing costs, and the prepaids. These are the fees and costs associated with obtaining a mortgage loan. These are the fees you have to pay up front, okay? So the down payment, like Cynthia mentioned earlier, if you pay a down payment on a conventional mortgage, it's 3%. If you pay the down payment on an FHA loan, it's 3.5%. So it's a little bit higher, but the thing about FHA is that you might be able to qualify better for an FHA loan depending on your situation. The other thing you have to worry about is the closing costs. These are the fees associated with buying the home, and they have to be paid as well, along with the down payment up front before you purchase the home. And then last but not least, you got prepaids. Prepaids are your homeowner's insurance, your mortgage interest, and your taxes that you have to pay when buying a home. So, you know, with those three things involved, you know, you can end up paying a certain amount that could be, you know, I'm just going to give you an average. If you're buying a $250,000 house, it could be around, you know, $16,000 if you add it all up for down payment, closing costs, and prepaids. But that's not the same amount for everyone. I'm just giving you an example, okay? But down payment assistance is a way that many of my clients have been able to lower that amount that they have to pay to get into the house. So there are programs available for first-time home buyers and also for folks that have bought a home before, okay? And what it does with down payment assistance, it helps you with the cost. One type of down payment assistance is a grant program, okay? That's money that you do not have to pay back. There's down payment assistance grant programs that are available through the city and through the state. And sometimes there's down payment assistance programs available through the lender that you're working with. We have those type of down payment assistance programs available too. Another down payment assistance that's available for most of my clients is a second lien, where you put a second lien behind your house, but you don't have to pay it. It's only payable when you sell or refinance the house, and it doesn't really come out of your pocket. It just comes out of the equity of the home. Then also another down payment assistance is a second lien that's forgivable after a certain amount of time. For example, you can be in the home for 3 years and you will not have to pay it back. That's a down payment assistance program that's forgivable. Another down payment assistance, or most down payment assistance programs are going to be available through nonprofit organizations, through the county, or through the city where you're located. So I advise you to do your research and do your homework to see if there's any programs that may be available that you want to go over with us as the loan officers, and we can talk about it. Also, there's down payment assistance programs with tax credits available. So down payment assistance do have requirements because everybody doesn't qualify for down payment assistance. So some of them you have to be a first-time home buyer. Other ones you don't have to be a first-time home buyer. A lot of the down payment assistance programs have a maximum income limit. So you can't make more than a certain amount of money to get down payment assistance. But that's what we're here for, to let you know how much the maximum income limit is for each down payment assistance program that you may qualify for. Some down payment assistance programs depend on where the property is located, okay? And then all the down payment assistance programs have a minimum credit score requirement where you have to meet in order to qualify for the down payment assistance. But that's what we're here for. We're here to see what you can qualify for. But I'm gonna give you an example. If you are purchasing a $250,000 house, okay? And like I said earlier, the down payment is $7,500, right? And then you get down payment assistance. Well, that's $7,500 if you get down payment assistance for 3%, which means that you will have zero out of pocket for the down payment. That's a deal. So what that means is that you're purchasing that home and you will not have to pay any down payment because you got down payment assistance. Another example is, let's say you buy a house, $250,000, closing cost, it's going to be $2,500, just to give you an example. Prepaids, remember that's your taxes and your insurance and your mortgage insurance, that's $5,500. Then you got the down payment that's due, which is $7,500. So that's a total of about $15,500, okay, to get this house. But let's say you sit down in front of me, I go over your information, I'm like, hey, you qualify for down payment assistance. I can give you 5% that will go towards your closing costs and your down payment and your prepaids. And 5% of this particular loan amount will be around $12,125. So now, instead of having to bring $15,500, if you get the seller, because sometimes the realtor can negotiate the seller to pay some of your closing costs, and then plus you do the down payment assistance, now you only have to bring the closing like $1,375. Isn't that a lot lower than if you was renting a place? I'm telling you, sometimes it's a lot cheaper. It costs less than to purchase a home. And that's why we want to talk to you guys today and give you this information. Some more information is the 411 on FHA loans. FHA loans are more attainable for individuals with less than perfect credit, and the guidelines are not as strict as the conventional guidelines, and many first-time home buyers will qualify for an FHA loan when they don't qualify for a conventional loan. Here's the benefits, the pros. You get a lower interest rate. A lot of times the MI payment is going to be less when you have less than perfect credit. Then also the qualifying criteria, it will qualify you for a higher loan amount with less than perfect credit. Sometimes I can give a customer more of a loan going through FHA. Now, the cons about a FHA is that you will have to pay upfront mortgage insurance premium, which is 1.75%. So that's going to be tacked on to the loan amount. You also have to pay mortgage insurance for the life of the loan. And then also, if you have student loans, for example, 1% of that student loan debt will be counted towards your DTI. So the specifics about FHA loan is that most counties here in the DFW area, the maximum loan amount is $356,362. The high balance loan amount is $822,375. You also have the standard fixed 30, 25-year, 20-year, 15-year term. You can also do an adjustable rate option as well on an FHA loan, which most people don't do because they're concerned about their payment going up if they choose that option. And we could talk more about that as well if that's something that you want more information on. And then also the down payment is as low as 3.5%. Yeah, it's not low as conventional, but 3.5% is a decent down payment when you're purchasing a home. So the other thing that I do want to say as well is that it's important to have a real estate agent to help you. Like I said earlier, you get the right real estate agent, they'll help negotiate some of those costs for you to help lower the amount that you'll have to bring to closing. Me and Stephanie have helped many mutual clients do that and was able to get them qualified to purchase a home. The real estate agent can also help you decide what you want in a home, right? Because sometimes, people come to Stephanie, I'm sure Stephanie, and they don't know what they're looking for. And then you're able to give them some examples and some good ideas of what would be a good property for them to try to purchase. A lot of times the real estate agent will find a house through the MLS, the multiple listing service. So a lot of times when you go on these websites and you see a house and it says it's for sale, sometimes they're already sold. Well, especially here in DFW, they're gone already because that's how fast houses are selling. So you got to have a real estate agent to help you find those houses so you have a better shot of trying to put an offer in on a particular property. They can show you potential homes that you may not be aware of as far as that's available for you to purchase. They provide you valuable information on the community and what's going on in the neighborhood, the tax rates. All that stuff is important and you want to know it so you can make a wise decision on what home you want to buy. They also make an appropriate bid on the home. So they're going to know how much you should offer for a house because they're very familiar with the market and they're going to be negotiating to get you the best possible deal. The real estate agent will work with the loan officer as well so we can really make sure that you're purchasing the right property that's going to fit your need and your finances. And the best thing about a real estate agent is you don't have to pay them. The seller pays for the real estate agent. So a lot of times people will think, well, if I get a real estate agent, I'm gonna have to pay him. No, the real estate agent gets paid by the seller and their goal is to find you the right home and get you with the right seller because that's when they make their money on the deal. So they're looking out for your best interest all the way around. So I always advise to get a real estate agent. And one of the best real estate agents I know is going to be Stephanie Spann. Now, here's the deal. You're welcome. You're welcome. Now, check this out. We talked about renting a home is always cheaper than buying. Nope, I bust that myth. We talked about you need perfect credit. Nope, the average, I know we mentioned it earlier with Cynthia. Same thing with us. 620 or higher credit score. Those down payment assistance programs I told you about, 620 or higher credit score and you can qualify. Another myth, you need a large down payment to buy a home. Well, I killed that myth to let you know that if you get down payment assistance, get some seller credits, you may be able to get into that house and pay $1,300, $2,000, which is still cheaper than if you decide to rent a place. Then last, there's no benefit in using a real estate agent. I bust that myth, letting you know that a real estate agent is there to look out for your best interest, y'all. I think this is some great information. And I really think, guys, that you are probably more ready to buy a home than you think. So contact me, contact Stephanie, contact Cynthia, and we'll be more than willing to go over some options that we think you'll be pretty pleased with. All right. So that's all I got to say. I think I said a lot.
You said a lot of good information.
Thank you.
So you see why I said these two people, you are going to be glad you know them, because they are the glue that gets you that house. You will need them. And believe me, it's good to have people that I can call and just see how are things going with you. Now, I know you're excited because you don't have to pay me for all that hard work, but I enjoy doing what I do. And I'm going to share my screen and I'm going to tell you the rest of this process. But as you see, the two people that we just talked, that you just met, they are going to be very instrumental in you getting your next home, getting your home. Okay, now I skipped ahead a little bit. I got excited. So now you have had your appointment with Cynthia or Gary. You know exactly how much money you can afford, how much the house should be. You have a good idea of your closing costs and everything. So guess what? It's time to go shopping. But like I said, you're not going to pay me, but I am going to ask you if you will sign a representation agreement. And all that means is that I'm going to represent you in this transaction. I'm going to work hard for you and I'm going to guide you to that home that you want to purchase. And at any time that you say, I don't know, I don't like her, I don't want to work with her, I don't want to work with her, and I've signed that paper and she just won't let me out of it, well, you're wrong. If something happens and you decide that you don't want to work with me, it's easy. I don't want to force myself on you. We can cancel at any time because my business is a relationship business. Cynthia and Gary's business, we are in a relationship with you to help you get what you want. So you can cancel at any time, but guess what? I know you're not, because I'm going to give you some excellent service. So then let's see, for some reason it's not going down. All right. So we're going to get going shopping because you're pre-approved. Now, what I'm going to do is I'm going to set you up on an automatically generated email where you get to see homes that look just like this one. And it tells you everything about the home and the price, where it is, number of bedrooms, and all of the specifics. Now, the information that I'm going to be sending you is going to be because you have given me the criteria that you want in your home. You've told me where you want it to be, how much you want, how large you want it to be, the school districts, the cities, and everything. And those are the things that I'm going to send you. And I am going to guarantee you, if there is a house out there that meets your criteria, I'm going to find it. And because right now we have the COVID guidelines, there will be times when you want to go and see a house and we have to make appointments. No one else can be there but us. We are going to always respect that homeowner and that home. We're going to wear our masks. We're going to social distance. And it's important for you to know that, because I want you to see me on Zoom first, because when you see me in person, I'm going to have a mask on to protect you and me. So we're going to go shopping. You're going to find that perfect house that you want. And then we are going to make an offer. Once your offer is accepted, that's when I'm going to explain to you, but I'm going to let you know all of this up front, that you will have to submit earnest money within 3 days. Now, let me tell you what earnest money is. Earnest money is usually 1% of the cost of the house that you will submit to the title company for your escrow. And that is what Gary was talking about, your taxes, your insurance, and things like that. This money goes right back to you, You're just putting it up front so that this seller will know that you are very interested and you're committed, you got some skin in the game, and you want this house. Then you will have to pay an option fee. That's usually $100. That goes to the seller. Now, the option fee is so that the seller can take their home off the market, say it's under contract for you to do your due diligence. Your due diligence is to get an inspection. Now, an inspection is something also that you will have to pay for up front. And I'll make you aware of that. I have an excellent company that I recommend, but I also, it's a wide variety of companies out there. But most lenders in Texas and other states will require you to have an inspection on the home. This is important because you want to make sure the roof, all of your systems, your foundation, and that home is in perfect condition for you to move into. Now, they may find some things that are just maybe $5 or $10 and may need to be replaced or switch or something. Those are not the things they will show up in the inspection, but those are not the things that we're mostly concerned about. We're concerned about your electrical, your plumbing, your HVAC, your appliances and things like that. And in Texas, we're concerned about termites, the wood destroying insects that will compromise your property. So once we make sure that all of those things are taken care of, then the lender, that'll be Gary or Cynthia, they'll be ordering your appraisal at the same time. The appraisal will give you the exact amount that this house is worth on the market. I'll also be giving you a CMA that shows you the houses that have been sold within the last 90 days to give you an accurate amount of how much the house will sell for. So in conjunction with that, and we're usually really close on that, those are the things that you'll pay for upfront. Those are the things that you're going to need. And your lender will tell you about the cost of the appraisal. I'll go over those other things with you at our initial consultation. Okay, let's talk about the 10 days after it's acceptable. You get that home inspection, and at that time, if they find anything that is wrong with the home that you and I will discuss that you want repaired, well, then we'll send an amendment to that contract and ask that seller to pay for those things. That's within that 10 days. And that's your option period. You've paid that option money for your option period, which is from 7 to 10 days. Within that time, you can cancel that contract and for no reason, just say the sun is not shining today, I'm canceling. I'm a weather person, I'm canceling. You'll get your earnest money back, but that seller will keep the $100 because they took their house off the market for you to do your due diligence. Then we're going to go into the appraisal. Now, let's just say that you have offered $250,000 for this house, and the appraisal comes back and it is appraised at $240,000. You don't have to worry about paying more than the house appraised for. I will do an amendment for that and negotiate that with you. You will never have to pay more than the house appraises for. But those things can happen. They don't always happen, but if they do, you are protected. You're not going to have to do that. And then to remember, you can always get out of the contract with your financial addendum because it states in there that if the house must appraise for a certain amount. If it does not appraise for what you offered and you don't want to pay more than, if you don't just love this house and want to take $10,000 out of your own pocket and pay, you won't have to. We can cancel that contract. Then we are on the road to close. That's an exciting time. So one day before closing or 2 days when it is convenient for you, we're going to do our final walkthrough. That is to make sure that the house is in the condition that it was when you first looked at it. If there are any repairs that need to be done, that they have taken care of that. And you're going to know that because I'm going to be asking for invoices and receipts if there's anything that needs to be repaired or replaced. So now You're ensured that the house is in good condition. We go through that walkthrough, and then we're going to go to the closing table. After you have signed all of your documents, the buyer will give you your keys, and guess what? Congratulations. You're a homeowner. That is the key. You become a homeowner, and we celebrate. Now, once you have gone, when you have decided that you are ready to purchase a house, I want you to call me, Stephanie Spann. That is my cell number, my information. I'm going to have you to call Cynthia or Gary. Now, I must tell you, there are only two things that I'm going to ask you about money, credit, or any of that. And that's because that is not my expertise. That is for Gary and Cynthia. I'm going to ask you first, do you have an income? All right, if that's going to be yes or no. Okay. Then I'm going to ask you, will they find anything negative on your credit? That is going to help me decide which one of the lenders that I'm going to send you to. So after we have gone over all of that, you have our information. Then my mission is to always exceed your expectations and make you a very happy client. And when you buy your house, don't think that Gary and Cynthia, we're going to just say, oh, we're done with that. No, we're going to keep in contact with you. After that, we're going to continue to give you valuable information and give you service. So not only have we helped you purchase the biggest purchase you'll purchase in your life, you have always made a friend for life. And guess what? Do you know who my most valuable client is? You are. So we want to thank you for sharing, taking the time to be with us today. We have enjoyed you. This has been fun. I hope you got a lot of valuable information, and I'm going to say bye, and I'm going to let Cynthia and Gary take us out. Gary.
All right. So if you have any questions or any
Stop.
financial needs,
You know what?
reach out to us and let us know. We'll be more than happy to assist you.
I
And
forgot to hit record. I'm
like we
looking at it.
said before, we want to make sure that we take care of you and put you in the best position we can put you in. Cynthia?
Gary, no, I forgot to hit record.
No, it's recording. I see it recording.
All right. I thought I forgot to hit record. Okay. Cynthia, you see you can mess up, but hey.
That's all right.
Cynthia?
Yes. Well, thank you so much, Gary and Stephanie. I am here to assist you any way that I can. I am available literally 24/7. And just give me a call and we're here to help you.
Thank you. All right. Bye now.
All right, y'all. Have a good one. Thank you.
Thank you.
Bye-bye. All right. Are we leaving the meeting?
Yeah, I mean, you could, or it looks like it's still recorded, but you can press stop for now.
I did something. I pressed. Okay. I'm going to leave and come back. Click it again. I'm going to leave.
Okay.